and welcome to today's webinar, 7 Ways to Grow Your Business. My name is Julie and I'm the Director at Spats Accounting Limited, and I'll be your co-presenter today. The other lovely face there is Rebecca, and she is from Spencer Lawrence Accounting, and Rebecca will be presenting the second half of the webinar. We're just going to chuck out our faces now and carry on.
Okay, let me see if I can do that, Jules.
For those of you who are unfamiliar with the webinar environment, we've muted everyone's microphones to ensure everyone can hear the presenters. If during the webinar you've got any questions, please go to the Q&A button at the bottom of your screen and type in your questions. We'll go through the questions at the end of the webinar. And you can click the leave button anytime you need to leave the meeting. We promise we will not increase your fees just because you decide to leave early. Right, now we're going to start. We're going to kick off with some wise words for the session from Thomas Jefferson. If you want something you've never had, you must be willing to do something you've never done. These words were written about 230 years ago. They're as true today as they were then. This session today is about challenging you to do something different in your business so you can get results you've never achieved. Before we get stuck in, I just want to throw in our usual disclaimer that the information in this educational webinar is general in nature and no substitute for tailored advice specific to your particular circumstances. One of the biggest problems in small business is failure to implement. If you don't write your goals down, you won't remember them. Just like if you don't write your actions for the next year, you're less likely to achieve them. We're going to cover how you can make the choice to change, how to develop a roadmap and dashboard for your business and what they are. Rebecca will then get into the 7 ways to grow your business, and she'll show you a worked example which demonstrates how you can make seemingly small adjustments to your business, but the compound effect on the bottom line and cash flow can be quite significant. Then it's accountability time. When you've decided what action you're going to take as a result of coming along today. Again, if you have any questions during the webinar, send them through and we'll answer them at the end. We've been through a lot recently, and it's likely you know you need to make some changes in your business. Change won't just happen on its own. You have to make the choice to change. You're in control of how you respond to the recent crisis. There are 5 general steps in this process. The first is being aware that you need to change. It's unlikely your business has been able to continue as normal and changes need to be made. If you don't make changes, will the business be impacted and will your profit drop? The next step is to accept that you need to make change. It may not be easy, but the alternative of not changing won't be easy either. Now that you've accepted change is needed, you need to take action. What steps do you need to take to enable the change? Most people get stuck here. The action to take is to create a business plan so then you can track this during the year and make sure you're carrying on. To make sure you do take the action, accountability is required. Being held accountable by someone independent really does make things happen. And finally, time to acknowledge the change you've taken. Take your team on the journey with you and give a positive reinforcement when the changes are actioned. But before you can make a plan for where you want your business to go, you must first understand where your business is now, which is point A. The impact of COVID-19 means that it's likely you're further away from your destination than you would have been. Point B may now be harder to get to. It's likely that your original point B is still possible. It just might take longer, or the route might be different to get there. For example, before COVID, your point A may have been that you had a $10,000 overdraft, and your goal was to reach point B of having $10,000 in the bank account within 12 months. So you needed to increase your bank account by $20,000 to reach that goal. So what does your point A look like now? Maybe you had to extend your overdraft by another $15,000 to cover your expenses over lockdown. So the starting point, point A, is now a $25,000 overdraft. And the journey to get to B is increasing the cash in your bank account by $35,000. You may think that it's more realistic to aim to get to point B in 2 years instead of 12 months. Do you know what point A looks like in your business? What is your goal for point B? And what does the journey look like to get there? So, now that you know where you are as a result of COVID, so your point A, and you know where you want to go, your point B, you need to revise your plan. This could be reviewing and updating your existing business plan, or it could be developing a business recovery plan. If the impact on your business has been minimal, it's likely an update to your business plan would be your best option. If your business, though, has been significantly impacted, we'd recommend a business recovery plan. This will help you revise your personal budget to reduce the pressure on your business's cash flow, determine whether any additional finance is needed, and revise your business budget and the break-even analysis. You'll also establish your most critical key performance indicators, or KPIs, like sales, debtors days, etc., to monitor at this time and identify opportunities, vulnerabilities, and critical challenges that may have developed. You then identify risks in your business and set annual and 90-day goals to help you achieve your plan. Right, now we have a really nice picture of a car, and both Rebecca and I, being girls, don't know much about cars. So do you know what this car is? If you do, can you put it, tell us down in the Q&A. Right, now you know where you're going and what you want to achieve. It's time to set up your dashboard. The dashboard on your car shows you how fast you're going, how much fuel you have left, and the temperature of your engine. It gives you an indication about whether you'll make it to your destination. This is the same in business. The things on your business dashboard are key performance indicators, or KPIs. Essentially, they are measures which tell you if you're on track to achieving your plan. Your dashboard should show the top 4 or 5 measures which drive most of your business improvement. Focusing on a small number of these measures allows you to capture, monitor, report, and improve them on a regular basis. Your most important KPIs will depend on the type of business you have, as well as your goals. So for example, a tradie, the most important KPIs might be gross profit percentage, the cost of rework, and debtor days, so how long it's taking customers to pay you. Whereas a retailer's KPIs might be sales, the gross profit percentage, how much each average client is spending, and how many times they're coming in, the transaction frequency, plus the value of stock being held. It's important you determine which KPIs you should be measuring. Set the goals for improvement and establish a dashboard to regularly monitor how you're progressing. When you set goals, do you have someone to hold you accountable for what you've committed to? What are the consequences for you if you don't achieve your goals? Do you have a soft coach or a hard coach? Remember the 5 A's of change? One of them was accountability. You simply must have someone independent hold you accountable to your actions, and there should be consequences for inaction. Having your spouse hold you accountable generally doesn't work and will not create the happy wife, happy life. Independence really is key. To summarise, if your business is the vehicle that delivers you what you want in life, the 4 top things you need to do to make sure you get to your destination are...
Oh, Julie, before you get started on that,
Yeah?
nobody could guess what the car was.
Oh, that's good.
I thought it was a very nice looking car, even if it is an old Mercedes.
Yeah, it is. Yeah, and we did take us a little while for us to work out that it was the Mercedes. We had to use the emblem on the bonnet to help us. So, okay. So the 4 top things you need to do to make sure you get to your destination are: set the annual plan, set the annual budget, set and measure your 4 to 5 most important KPIs, and have someone independent hold you accountable to your plan. Before I hand over to Rebecca to start on the 7 ways to grow your business, it's important for you to understand the marketing flywheel. This concept shows how to attract, engage, and delight customers, and demonstrates that you shouldn't just focus on gaining new customers, but that you should focus on delighting your current customers. First, we have strangers, people who haven't heard about our business. We can do some marketing to introduce our business to these strangers, who will then become prospects, who have the opportunity to buy. When these prospects make a purchase, they become customers. And if we treat them right, these customers will become our promoters. The more promoters we have, the more people we have to speak to strangers about our business, and so the cycle continues. In order to attract prospects to our business, we need to provide value before we extract value. Think about what they'll get from doing business with you and the problems that you can solve. To convert prospects into customers, we must engage them by making it as easy as possible for them to buy from us. Our marketing is what attracts and engages prospects and turns them into customers. Our sales process should ensure customers continue to be engaged and are followed up with really good service. Delighted customers will share their feedback with strangers, creating more prospects, customers, and promoters. The level of service we provide determines how we delight and attract current and future customers. The aim is to keep the marketing flywheel spinning as fast as possible, converting more strangers into prospects and prospects into customers, and providing such good service that those customers become promoters. Following this process is essential to growing your business. Now I'll pass over to Rebecca and she'll take you through the 7 ways to grow your business.
Thanks, Julie. So there's 7 ways to grow your business. And the very first one that we're going to focus on is to increase your customer retention rate. So the first thing to think about is, what is a customer retention rate? Customer retention rate measures the number of customers that a company continues to do business with over a given period of time. So it's much cheaper to make sales to an existing customer, and in fact, it's actually 6 times easier and cheaper to make sales to existing customers than it is to new customers. So by delighting our customers, we make them want to return, and therefore that increases our customer retention rate. So a question that you might want to ask yourself is, how do you delight your customers? Is that from the quality of the work you do, the efficiency of the work that you do, that you're personable, you have good communication skills, you might save them time or money? Julie and I, we recommend the FGG principle as a way to delight your customers. The FGG principle is all about first of all, finding out what the customer wants. So you might be able to do that through surveys or feedback forms from your existing clients. And your aim is to find out exactly what they want and how you can help them better. And once you know what they want, you need to go get it. And that's the first G. You need to find out where you can get the product or the service, or if you can do it yourself, or if you need to outsource it, or if you need to innovate and develop it. You need to work those things out. But once you know what your customer wants and that you have it, your next step is to go and give it to them. So you need to think about how you're going to deliver it to them. You might need to create some new processes, you might need to train your team, you might need to implement some different plans, but you need to think about how you're going to give them what they want. And the idea of the FGG principle is that it all works together, all combined. So there's no point finding out what the customer wants, going to get it, but not delivering it. The part where you have to focus your time and energy in is in the middle of those three wheels. So you need to maximize all your opportunities, offering them as much as you can, but still be competitive. So that's the FGG principle. So that's another thing that Julie and I can always help you with to develop for your own business if need be. So the second way to grow your business is to generate more leads. The best way to generate more leads is to delight your customers so they refer business to you. So if you think back to that marketing flywheel, you can't just rely on your existing customers to give you new business. You also have to attract strangers. And there's a number of ways that you can look at to attract strangers to your business. So you might, through your website, you might be able to offer them a free download, or you might be able to offer them a free trial, or even like a free consultation. But what you're trying to achieve is to find out what their problems are and how they can engage you in order to solve their problems. The third way to grow your business is to increase your conversion rate. So a question for you is, do you measure how successful you are at converting leads or quotes or proposals into sales? Do you regularly review why you aren't converting them into sales? A key to successfully converting sales is to ensure you're dealing with the decision maker and not the gatekeeper. So in some businesses, the secretary is often the gatekeeper. Her mission is to keep you away from the person who can make things happen. But you need to go straight to the people who can make decisions. Another option for you to consider is to offer them a range of options. So their question isn't so much which option should I buy. Sorry, I take that back. It should be a question of which option should I buy and not should I buy at all. The fourth way to grow your business is to increase the transaction frequency. So as we've all said earlier, it's much harder to sell to new customers than it is to sell to existing customers. So it does make sense for you to encourage those customers to buy from you more often. So there's a number of ways that you can look at doing this, and that might be sending out reminders, introducing VIP cards, or offering special deals to existing customers. The fifth way, to increase your increase your business is to increase your transaction value. And I'm just going to put myself on mute for a second because my puppy is annoying me. Hang on 2 secs. Apologise for that. Right, the fifth way to grow your business is to increase the transaction value. This doesn't necessarily mean increase your prices. Think about how you could add more value to your customers. Could you provide them with a range of options? Can you upsell them? If you follow the would you like fries with that concept, can you adapt that to your business? And is it clear what your business offers? Don't assume customers already know what you can offer them. You need to tell them. And if you are able to upsell a client so that they purchase another add-on, try not to offer them a discount because your mission is to try and increase that transaction value. The sixth way to grow your business is to reduce your variable costs. So variable costs are directly related to the sales. So these are the costs which increase as sales increase. And examples of that are labor costs, material costs, and if you do sell things and provide commissions, that might also be a direct cost to the sale. So implementing better systems to accurately record time and materials used, as well as implementing strategies to reduce rework and wastage, will help reduce your variable costs. There are a number of job costing software out there that can help you track your labor costs and material costs per job. And if you're interested in those, Julie and I can go through them with you in depth. The seventh way to grow your business is to reduce your overheads. Overheads are your fixed costs like the phone, power, rent, office supplies. So how often do you review your overheads? Each year, you should review your fixed costs and identify any that you could potentially reduce. An ideal time to do this is once we've completed your annual financial statements. You may be able to negotiate better terms for your power and your rent, or you may be able to reduce the amount of your office supplies. So while we're on the topic of reducing overheads, let's talk about accounting fees. We're telling you to reduce your costs. So if you think we are a cost, then you should probably cut us now. But if you want us to work with you as a strategic partner in your business, then you need us more than ever. And you need to think of us as an investment rather than as a cost. Our goal is to save you in tax, help you grow your business, and any extra money you pay us should be recouped by increasing your business. There's a quick question, so I just thought I might just check the questions. Oh, Michelle, you want to see the puppy? I may be able to arrange that at the end. The growth equation. So this is where we want to show you how the 7 ways to grow your business can actually impact your business and put it into more of a practical example. So if we took a business that has existing customers of 765 and they've got a retention rate at the moment of 85%. So they're retaining 85% of their existing customers, they keep coming back and buying more. So their existing customers that have been retained is 650. If they generate leads or inquiries of 145, but they convert 50% of those, they get new customers every year of 73. And they've got a total number of customers of 723. If the transactions per year that these customers have with the company is 1.1 times per year, with a transaction value of 1,500, they have annual sales of just over 1.2 million per year. Now, offsetting against those annual sales are the cost of goods sold. And they are saying that 70% of the annual sales income is used to pay those cost of goods sold. And those sorts of cost of goods is the materials and labour costs or anything directly related to making those sales. And then they have expenses or the other fixed costs that relate to the business at 265. So for this business, they have a net profit of 107,000 for the year. Now, we value business schools quite regularly in order to give you an idea of what your business would be worth if you were going to sell your business in the future. And we often use a calculation where you take the net profit, you times it by 3, and that will give you a value for your business if you're going to sell it in the future. So for this business, as it stands at the moment, it's valued at just over the $320,000 mark. Now for this customer, if they tweak a couple of their things, like we've talked about in the 7 ways to grow your business, and one of the main things they tweak is the retention rate, so trying to retain their customers, their existing customers, this is how the growth equation changes. They already have their existing customers of 765, but they increase their retention rate by 5%. So they retain their existing customers of 689. They have the same amount of leads, but they actually have a slightly lower conversion rate of 4 to 45%. So they're more focusing on their retention of their existing customers. And by looking at their retention of their existing customers, their total customers increased to 754. The next thing that they look at doing is increasing the transactions per year that the existing and the new customers have with them. And they've increased that to 1.3 times a year. And they've increased that transaction value by only $40 per time. So by tweaking, focusing on the existing customers, changing the transactions per year, and increasing the valuation of those transactions per year, they've increased their annual sales to over 1.5 million. And if they spend a bit of time on their cost of goods sold and making sure that there's no wastage and there's no rework, and they've been able to reduce their cost of goods sold down to 65%, and they've spent a little bit more money on their fixed costs by increasing what they spend on advertising and marketing, the end result is they've increased their net profit to 248,000 from 107. And they've increased the value of their business to just under 750,000. So you can definitely see by making a few tweaks on their strategy, how that can dramatically improve their net profit and the valuation of their business. So, I mean, this is all just an example. So if you ever want to go through this in relation to your existing business and how this can work for your business, then just let us know and we can run through this with you. So what do we do now? Albert Einstein has this famous quote: insanity is doing the same thing over and over again but expecting different results. So at this point, you have 4 choices. And I'm just going to put me on mute so I can take the squeaky toy off the dog. I am sure I got rid of all the squeaky toys before this thing started. Okay. So you have 4 choices. You can do nothing. So you can walk away from this webinar and go, well, that was a nice webinar. I enjoyed my cup of coffee, but you're not going to do anything. You're not going to make any changes to your business. You could retreat. So you might try a couple of things, but then you might have a couple of bad days at work, and so you retreat back to the ways that you always were. Option 3 is you can take a normal amount of action. So you could do a few of the easier things and make some quick cash flow improvements. But if you haven't fundamentally changed your business, any of those quick wins will just evaporate. So ideally, you want to take a massive amount of change, of action, and you want to fundamentally change your business, because isn't your goal for your business to serve you as opposed to you serve the business? And there is an old saying, which is, if you do what you've always done, you'll get what you've always got. Now, with COVID and the current environment that we're in, if you do what you've always done, you'll get less than what you used to get. So how can Julie and I help you? There's a number of ways that we can help you. This webinar is purely educational and it's very general in nature, and it's no substitute for specific tailored advice and support. And there's several ways that we can help you. So if you don't already have a business plan, we can sit down with you over a half-day session and develop your business plan with you. If you need a bit more accountability to ensure you're on track to achieving your goals, we can meet with you quarterly to review and reset the goals and actions in your business plan. And we do offer other coaching options, so if you prefer more frequent accountability, we can do that. We're also offering all attendees the opportunity to complete the 7 ways to grow your business action list. So I'll email that out to everybody shortly. And this allows you the ability to identify your actions that you're going to take with your business. And then if you send it back to us, then we can sit down and do a 15-minute free complimentary call, and we can review your action list and ensure you've identified all the actions relevant to your business and that you plan to implement change. Or of course, we're here to do a complimentary meeting if required. So I think we might pass on to questions. So we've covered off a lot of information. So if you have any questions, you can put them into the Q&A box, and we're here to answer them if you have any questions.
Just remember that there is a very short time I've been able to do the questions now. So if you think of a question later, please just email Rebecca or myself, and we're happy to answer.
In the meantime, while you guys are thinking if there is any questions, the puppy I have is a 5-month-old puppy who's training to be a guide dog, who has the entire time through this webinar been playing with her toys, and now that we're at the end, has decided to go to sleep.
And for the people who know me, I have a dog, Oscar. He has stayed at home deliberately so that he didn't decide to bark at the people walking up the road just as we were doing this. Now we do have one question.
We do.
How often should you review your business plan? I would say yearly, like do a full review each year. And then you should have your business plan should include targets that you're going for during the year. And so you would check that to make sure you're actually still hitting the targets so you can achieve what you were planning. What do you reckon, Rebecca?
I agree, Julie. You should always sit down and review your business plan every year. And then you can tweak it as you go, obviously, as well. So a lot of people have tweaked their business plan due to COVID.
Yeah, so don't think it's something that you do once a year and you never look at again. It's something that you do the big review once a year, and you have actions that you're going to take, and so you should be keeping check on those actions to make sure that they are still relevant and that you're actually achieving them. And that's where having the independent person actually helps you, because they make sure that you're actually doing what you say you're going to.
Yes, and I agree, Michelle. It's actually a good time to do it once we've done your annual accounts. You can review your business plan anytime during your year, but if we've done your annual accounts, that's not a bad time to also review your business plan, and you can compare your figures in your business plan to what you've actually achieved in your annual accounts.
Okay, Rebecca, what do you reckon?
Yep, I think if there's no more questions, we might thank you very much for attending, and thank you very much for your time. If you do have any particular topics that you want us to cover off in any future webinars, please feel free to email Julie or myself, and we can organise more webinars covering off any topics that are suggested.
And if you have friends who you think would be interested, please remember we post these up on our Facebook pages and also via our websites, the recorded session, so that people can watch this whenever they want.
Yeah, perfect. Lovely. Thank you very much, people. Thank you for joining us, and we'll sign off, and hopefully you guys all enjoy your Saturday morning.